The Crypto Markets Update is brought to you by KuCoin, the best place to find the next crypto gem.
Joining us now to make these very boring markets exciting is none other than Anthony Rousseau, Crypto Senior Director of Product Strategy at trading platform and broker TradeStation. Morning, Anthony.
Good morning. How are you guys today?
Oh, a little bit tired because I've been looking at the markets and it's like watching paint dry. So why is that? Why isn't anything happening? All the holders out there are like saying, oh my God, we invested in crypto and we expected moon. When moon? When moon? Come on.
When moon?
What's happening?
That's a great question. If you look at this Bitcoin bear market here and overall crypto bear market, essentially we're quite in line with, actually look back at 2018, the time frames between June and October in 2018 was very reminiscent of what we've experienced in this bear market. If you look at the history of Bitcoin, in its most volatile times, everyone's excited and everyone's bullish and can't wait for the next high. And in the bear markets, as you see less and less participants, that exist, it really starts to be reminiscent of closer to a bottom opportunity. And we're seeing that the diminishing volatility is definitely helping, I think, the Bitcoin, bottoming story start to come into fruition. And I think from a perspective overall, if you look at the duration aspect of Bitcoin bear markets, it's a critical aspect of it, taking place. If duration takes place in a very tight zone, there is definitely opportunity. Although there is a very large overarching macro dark cloud above us. So to get risk back into wanting to come into this space is going to take some definitely changes from the macro perspective.
You bring up risk and you bring up returns here. If I'm an investor, I'm sitting here and I'm looking at the price of Bitcoin and it hasn't moved in quite some time. It sits below 20,000 the entire time. What's the way to play this? I mean, why not just take my fiat, my cash, buy some 4% yielding risk-free assets and just wait for the price of Bitcoin to go up sometime next year if you have this macro cloud above it? Why not just sit and hold bonds for a little while? Is that the way to play it? Or do I take that risk? Do I, maybe play the volatility but not get my 4% yield like I want to?
Yeah, it really depends on, your market timing and what type of investor you are. I mean, overall, if you're a day trader, you're likely going to use different instruments. Derivatives market volumes have been actually starting to inch up over the past month of September. So derivatives is an opportunity for those who are day trading to either hedge risk or manage risk on a day-to-day basis. That provides a way to actually get into this space and take advantage of these range-bound opportunities. And for those who are traders, range-bound opportunities are definitely something that they look for to be able to take advantage of small price increment movements in a very concentrated market. So I think from a long-term perspective, yeah, exactly. There's a smile opportunity here and there from the derivatives perspective. Right now, there hasn't been that lucrative, but I think from a perspective of long-term holders, we are in that sweet spot. And I think that's really, when I say sweet spot, we were below a 200-week moving average. We're at historical lows. We've been only in this depressed type of price value to actual long-term value of Bitcoin overall in a 3% of its history, right? So I think from when you look at a long-term perspective, we're in a really, a sweet spot. But the unfortunate part is that there's no appetite for any market right now. I think overall, there's no place to hide. It doesn't matter if you're in bonds, you're in equities. Everybody's kind of waiting it out. Everybody's got some hopium looking for the Fed pivot, but people have been talking about that since really, the Fed's changed its tone since June. It really hasn't. The Fed's been quite certain with this policy, and it's going to be higher for longer, right? So you're decreasing liquidity. from assets globally that thrive on liquidity. So I think Bitcoin is part of that. So, is there opportunity for lower lows? It's possible. But, we're definitely in a bottoming range. And I compare it back to 2018. You look at 2018, we were in a $6,000 range right around the same time frame. And we halved from here. Am I saying that we can halve? It's possible. Am I saying that this is the bottom? It's possible. Right now it's possibilities, and I think that's what everybody's most uncertain right now is where to put their money. So people are really, they're sitting in cash. So there's a lot of people sitting in cash right now just waiting to figure out what to do.
So in a nutshell, what is it going to take, in your opinion, to make the market sort of swing one way or the other? I mean, what are the main factors you're looking at? Is it regulatory? Is it just some sort of like global macroeconomic thing? I mean, what are some of the things we should watch out for that could make this market change?
That's a great question. I think from a Bitcoin specific or a crypto specific market, looking specifically at Bitcoin, right? I think the biggest pressure to the downside and the risk that decoupled back in June was with all the leverage in the markets. I think that selling pressure has subsided. And there's a ton of on-chain indicators that are showing that selling pressure is getting exhausted, which is why you're seeing equity markets make new lows just recently and Bitcoin and crypto hanging on as a whole. I think from Bitcoin's perspective, though, you have to really look at the miners, right? Cost of production right now with the hash rate reaching new highs is really putting some pressure on the miners. And those miners that really were over leveraged in the bull market and trying to leverage on the existing treasuries that they hold of Bitcoin to either accumulate more Bitcoin or accumulate more hardware. Those miners are coming under pressure right now. And I think that that's a risk to the downside because miners are that constant sell pressure. Also, from a perspective, I think from the macro, the markets are, equities just, bouncing around, more volatile than Bitcoin right now. And I think it's really, everybody's get this hopium thinking that the Fed's going to pivot and change their policy. And until they do, we're in this, this zone. And I think that until risk assets can actually see liquidity come back into the space, which would be a pause and quantitative tightening stopping. Essentially, quantitative tightening is draining liquidity from the system globally. We have had the fastest easing and monetary tightening take place and that we've seen in our lifetimes in a very short period of time. So, and Bitcoin is really a monetary, I call it an M2 hedge. Essentially, as you expand the balance sheet is where Bitcoin thrives. And right now we're decreasing the balance sheet of the Fed.